Hey guys, Mitch Helman here, and welcome to another recap of Bloomberg Intelligence and Sandhills Global Dealer Survey. We really appreciate all the dealers that participated this quarter. Bloomberg Intelligence and Sandhills Global work closely together to better understand what dealers are seeing across the market. Bringing together Bloomberg's market intelligence along with Sandhills Global's industry data and dealer insights, we're able to provide a unique look into the equipment trends that include inventory levels, pricing, demand, and the overall market sentiment. The most valuable part of this survey is the direct input we receive from the dealers. Every quarter, we invite dealers from across North America to anonymously share what they're seeing in their local markets. Those responses help us create a more complete picture of where the industry is today and where it may be headed next. Now let me introduce you to Chris Ciolino with Bloomberg Intelligence. Chris and I will walk through this quarter's results and highlight some of the key trends emerging across ag, construction, and the transportation markets.
Great, thanks, Mitch. I'm Chris Ciolino, Senior U.S. Machinery Analyst here for Bloomberg Intelligence. I cover the agricultural, construction equipment, and commercial vehicle markets on the equity side, and look forward to our discussion today, Mitch.
All right, Chris, let's jump to the truck market here really quick. What are you seeing with the overall trends just in the truck market in general?
Cautious optimism. And to be honest, Mitch, I think this one surprised me a little bit this quarter. We've had exceptionally strong Class 8 industry orders over the past 6-7 months. Orders are running at a 400,000 plus 6-month annualized rate, even as we enter kind of these slower seasonal months here. But sentiment in 2Q really failed to match this order exuberance and was unremarkably stable. 33% of dealers said market conditions were similar to the prior quarter, with an equal amount seeing improvement and deterioration. Now, they are more optimistic about the future, with 48% expecting the market to improve over the next 12 months. That's up nearly 460 basis points from 1Q.
As far as demand when it comes to the trucks and trailers, what did you see after these dealer surveys?
It was muted in 2Q, and I'd even say mildly disappointing, as Class 8 retail sales have kind of been sluggish this year. Sales were relatively unchanged, with 43% of dealers saying 2Q was below their expectations. Another 43% also indicated sales were in line. While some dealers noted softening in vocational demand, this segment continues to still post some of the strongest growth and did so in 2Q as well. And despite the choppy sentiment and mixed 2Q performance, dealers' 2026 views improved modestly. We saw 33% expecting new equipment sales to be up this year versus only 26% last quarter.
What would you say the data is showing on pricing and dealer margins right now?
I'd say similar to last quarter. We saw higher pricing and lower margins again in 2Q. Pricing strengthened. It was up mid-single digits on average. And I think that reflects some of the higher input costs and tariffs that you're seeing. About 75% of dealers expect pricing to be up 3% or more this year. That's an increase from 64% last quarter. Now, margins still remain under pressure, with 47% reporting gross margins declined year over year in 2Q. However, expectations point to near-term stabilization, as 46% anticipate margins to be flat next quarter, and 22% expect year-over-year improvement, which should be helped by higher volume as we continue to see freight markets strengthen. You have some pent-up replacement demand. We now have regulatory and tariff clarity, and then you also have the pre-buying ahead of the EPA 27 emissions regulations.
With the dealers, what would you say they need to be watching for as we head into the next quarter?
Aside from our dealer survey, which is a must-read, there are a few things we'll be watching closely. With production slots essentially filled for the year, focus is now going to shift toward build rate execution, the supply base, and retail sales development. You could probably also throw in cancellations in there. With a growing backlog and the strong order progressions we've had this year, we're looking for a hockey stick-like ramp up here in second half build rates. Will the supply base be able to keep up? Will OEMs be able to meet these delivery commitments? Daily build rates will be a key item to watch. As I mentioned earlier, retail sales have been sluggish thus far. We need to see further sequential improvement from here to support a more durable recovery. And cancellations, we've been running at relatively subdued levels. So that suggests fleets, remain committed to their recently placed orders. but the reacceleration in energy prices and geopolitical uncertainty have certainly renewed some risks.
Chris, thanks again for sharing your insights and helping us better understand what dealers are experiencing across the industry.
Great. Thank you, Mitch, and thank you, dealers, for your participation. We look forward to seeing you next quarter.
I also want to thank everyone who participated in this quarter survey. Your feedback is truly what makes this research possible. If you didn't have a chance to participate this quarter, please reach out to your Sandhills rep so you can join us in the future surveys as we continue to build one of the industry's most valuable reoccurring benchmarks. I encourage you to download the complete dealer survey report for a deeper look at the results and to share with others within your organization. Thanks for watching, and we'll see you next quarter.